Hi everyone and welcome back to Money Mortgage Moving Out. I'm Sam and this is Pip.
Hi!
And today we are going to be talking about credit cards and overdrafts.
This is the second part of our debt episode, so if you haven't already, make sure you check that one out as well. It covers debt and different types of loans.
So let's start and talk about credit cards.
If you can manage to get your head around credit cards and how to use them, they can be extremely cheap and useful.
You can collect air miles or cashback and they can be good ways to borrow small sums of money.
But be careful because credit card companies profit from tripping you up.
This is how they make money, by offering different deals and confusing small print.
You have to do your research and find a credit card that best suits your lifestyle.
Really be honest with yourself with how much self-control you have before getting a credit card, because it can soon get out of control and end up with handing over unnecessary money to the banks.
When you take out a credit card, you are given a credit limit, and this is how much you are allowed to spend.
And what card you get is based on how desirable of a borrower you are.
Yeah, so if you have a bad credit score, you'll get a lower credit limit.
But if you really want to, you may be able to push it after you've had the card for a while.
But beware, because many credit card companies push up this limit when you've had the card for a while, and this can be a problem if you have no self-control. Like personal loans, credit cards are advertised with an APR, but you may only get this APR if you have a dazzling credit score. If not, you may be turned down for a credit card altogether. If you think it's a risk, don't apply, because every credit card application leaves a mark on your credit score. And future lenders will see if you've been rejected in the past. Like me, I applied for a credit card when I left university, but I got rejected because I didn't have a good enough credit score. If you're not sure that you'll be accepted, do a soft search, and this will give you an idea of the APR and the credit that you may be able to get.
All credit cards have a set time frame, of which you can pay your outstanding balance without getting charged interest. This is usually a monthly charge, and you will get charged immediately with any cash withdrawal from an ATM, which is something you really don't want to do, so don't use your credit card for cash withdrawals. And if you can't afford the full repayment in a month, you will have to cover a minimum payment.
This is a set amount from the bank which you must reach, otherwise you'll face fees and lose potential perks like cashback. The credit card company loves people who only make minimum repayments, as that's how they can make money. You have to make the minimum repayments, even if you have hardly anything left on your credit card and if you've paid double the previous month.
Try to set up a direct debit to avoid extra fees. This would be the easiest way to sort it. If you set it up the same day as you get paid, you'll never realise it's come out of your account. And if you only ever make minimal payments, then you'll get charged a huge amount in interest. So let's talk about a few types of credit cards.
0% purchase credit cards. If you want to borrow a big sum of money, these are the best ones for you. They allow you to borrow interest-free for a set period of time and only pay minimum repayments without getting any big charges. They can be long periods, which means you have longer to pay off your credit card without any interest. However, you can't ever miss a monthly repayment or you will lose that 0% interest. You need to make sure that you clear the credit in the set period or you'll be hit with extra high APR.
0% balance transfer credit card. The best way to clear existing credit card debt is to put them onto a 0% balance transfer card. These cards let you move a balance from another card onto a card with zero interest. This is really good if you've got a card with high interest rates. If you are paying interest on a card, we would advise you to do this now. You can never miss a repayment, otherwise you lose your 0% deal. And again, if you do miss any payments, you'll be hit with an extra high APR. A fee for missing payments is usually calculated as a percentage of your outstanding debt. This fee is a lot cheaper than the APR you would be paying. Some cards have no fees, but a shorter period of the 0% deal. So if you're confident you can pay your debts quickly, these are the cards you should choose. But don't spend money on the 0% balance card, or you will be charged high interest rates for doing that.
0% money transfer cards. If you need to pay off a debt or you need some extra cash but you can't get a credit card, you can get a money transfer card. These are a really good way to pay off high interest overdrafts. They let you transfer cash from your card into your bank account without paying any interest. For a set period of time, you can get the card provider to transfer the money into your bank account. You don't want to do this yourself as you'll be paying interest. Keep an eye on the length of the 0% deal. You don't want to go over this period of time, otherwise you'll be hit with high interest rates.
Cashback or airline miles credit cards. If you are confident that you can shop regularly with your credit card and pay it off in full each month, then a cashback credit card is one for you. It means you will earn rewards each time you spend your money. And for people with good credit scores, these can be very generous. You do often have to spend quite a lot of money in order for the cashback points to pay off. So you want to use it if you're going on a big spending spree. But there's definitely no point having a points card if you cannot repay each month, as the interest rates will outweigh your rewards.
Bad credit card. In truth, if you have a bad credit score, you will struggle to get a credit card. The best way to improve your credit score is by having a credit card, by paying little amounts and paying them back on time. However, the APRs can be unbelievable, so you should only get this card if you are sure that you can make your repayments on time.
Interest rates on loans and credit cards are advertised with a typical or representative APR.
APR stands for annual percentage rate.
It takes into account not just the interest, but other payments that may be important.
The description typical or representative are there because not all people get the advertised APR. Meaning that what the bank advertises is not necessarily the APR that you will get.
How you can borrow and at what interest rate depends on your credit score. Like a mortgage, the best deals are offered to people with the best credit score.
Some people want to borrow the smallest amount possible for the shortest period possible.
However, generally, banks charge a lower interest rate on higher amounts of money. So it may be useful to borrow slightly more than you need to get the best interest rates, and then you can put the excess into a savings account.
Let's move on to overdrafts.
They don't sound too risky because most of us as students had to rely on them, where you could get a massive interest-free allowance if you were likely to overspend. But don't get lulled into a false sense of security, because once the interest-free period is over, they can be very high interest rates.
I myself have been stung by this. When they told me they were closing my graduate account, they took my interest-free overdraft with it. I had the money saved, but I was reluctant to pay off my overdraft. But then once it closed, I was charged £50. So overdrafts can be more expensive than payday loans. The average APR for a £10,000 personal loan is 3.79%, but the average rate for an overdraft is 19.72%, according to the figures by the Bank of England.
Overdrafts can be either authorised or unauthorised. An authorised one is the one you sign up for when you open a current account. Most banks will let you dip into it by a certain amount of money. Some are interest-free, but mostly you will have to pay for them.
If you spend beyond, you are in unauthorised territory and you will get stung for this. It is virtually impossible to compare overdraft charges. Some charge a daily fee, some an interest rate and others a monthly fee. It varies on how frequently you go overdrawn, by how much and how long you stay in your overdraft for.
Authorised accounts usually have fees from 50p to £3, daily, weekly or monthly, and have interest rates of 15 to 20%.
Unauthorised fees can be a one-off or a monthly charge of £35 or more.
You can be charged even more by taking out cash or sending money into a direct debit when you're in the red.
As a quick rule, banks that charge a simple interest rate tend to be cheaper than those who charge a fee or a combo of interest rate and fee.
If you're someone that regularly dips into your overdraft, it may be worth finding out how much it's costing you and if it's worth changing bank accounts.
Make sure you're with a bank account that has an authorised overdraft buffer, and ideally this would be interest free.
It's much easier to switch current accounts, and if your overdraft is small, you might be able to switch.
If not, consider using a 0% money transfer card to pay off your overdraft so you can move to a cheaper card.
We hope you have enjoyed this episode.
As I have said, it is so hard to pay off an overdraft, but I can't tell you the relief I had when I finally paid mine off. So take the pressure off yourself and work gradually to paying off your overdraft.
Just draw up a budget and stick to it, and try and find all these little gaps in it that you can save a little extra money with.
To help you with that, we've already made an episode about budgeting and also an episode on tips and tricks of where you could possibly save a little bit more money. So go and check those out, and those should help you to get out of your overdraft.
But for now, we just want to say thank you so much for watching our episode in our mini-series Money.
If you haven't already, please like the video and subscribe to our channel because we appreciate your support so much.
Also, head over to our Instagram at Money Mortgage Moving Out.
And don't forget, we have now started a TikTok, so head over there as well and you'll see some fun behind the scenes videos, and you'll also see what else we've been getting up to.
We'll see you next time.
Much love!